Dear all, a very good evening to all of you. I am Sia Kritika Bhandari and I welcome all our attendees today to the 14th session of Taxo Prime Time. As you may be aware, Taxo Prime Time is our weekly webinar session on analysis of the latest judgments and important developments in GST. The topic for today's session is valuation under GST. I would now like to welcome our guest speakers for today's session. We have with us C. Anoop Gupta, Partner, Upran Associates LLP, C. Sahil Gupta, Astrozol Legal Service. I would now like to welcome Sumit ji, Head Content Taxo Online, to proceed with today's primetime session on valuation under GST. Over to you, sir.
Thank you, Kritika, for such a warm welcome. So, and I welcome to our guest speaker Sahil ji and Anoop ji to address our subscriber on an important topic, valuation. So, let's start our session. As we know that GST was introduced 5 years back, and since then we are facing so many challenges regarding input tax credit, regarding availment of ITC under various circumstances. And similarly, like valuation, if we talk about the valuation, it is one of the most important topic. Everyone is facing challenges, and on similar pattern, we have received so many queries from our subscriber, like certain circumstances in which valuation needs to be done. So we have compiled number of questions on that particular topic just to address our subscriber the situation, different situation in which the valuation needs to be done. So we'll take up all those queries one by one with our guest speaker Anoop ji and Sahil. So Anoop ji, shall I start?
Yeah, sure. Thank you for giving me this opportunity to interact with the subscribers of Taxo Online on such a good topic of valuation, which is very litigative, you may say, and all those things are there. There are certain confusions in the mind of the taxpayers also. So we will try to answer the questions which has been raised by your members and subscribers. So please go ahead.
Thank you, Anoop ji. Anoop ji, let's take first our first query. Like we have seen so many cases wherein free of cost goods are provided along with a particular good which are sold by a particular supplier. Yeah. So like we have a query Mr. X who is supplying goods good, that is I'm just taking a nomenclature, good Y. Mr. X supplying good to Y.
Okay.
Supplier is Mr. X and buyer is Mr. Y.
Right.
Good. I'm just giving a nomenclature to goods, two different goods, A and B. A having worth of 20,000 rupees at the rate of 18%. Okay. And good B is having worth of rupees 40,000 at the rate of 5%. Now the question comes out, Mr. Y, Mr. X is supplying to goods Mr. Y, good A free of cost along with good B.
Okay.
Are you getting my point?
Supplied free of cost.
Yes, free of cost. Right. So now the question arises whether zero value of good A is acceptable under the GST law. For example, for two goods, one is free and second one is tax for the consideration.
I got it. You mean that how the valuation will be done in this case?
Yes.
One goods are supplied with other goods which are given free of cost. It is very common phenomenon in Indian trade that one good is provided free of cost with another good, right?
Yes.
So in GST, we have to see the main valuation provision which is contained in section 15 of the GST Act, which says that where the price is the sole consideration of supply and the supplier and the recipient are not related persons. Then, if these two conditions are satisfied, that the price is only the consideration, there is no other consideration flowing from the transaction, and where the supplier and recipient are not related person as per the definition of related person provided under this section, in that case, the transaction value shall be the value on which GST has to be paid. In the given case, the value which we are charging from the customer, Mr. X is charging from Mr. Y, rupees 40,000 only for the B goods, right? So, as per my understanding, only the transaction value shall be the value for the purposes of GST, and rupees 40,000 on rupees 40,000 GST is applicable, right?
Okay.
One more aspect has to be looked into this thing. You have told that A goods are rupees 20,000 at the rate of 18%, and goods B are carrying the GST rate of 5%. So it is not the question of valuation, but as per the GST law, when two goods are supplied with each other, we have to see whether it is a composite supply or it is a mixed supply. If it is a composite supply, then if it is a principal supply, then we have to pay GST at the rate of the principal supply, what is applicable to the principal supply. So that aspect has to be looked into, that GST has to be paid on 18% or GST has to be paid on 5%. That is another phenomena which a person should look into while dealing with such type of transaction.
In case of free of supply, free of cost, in that case, we need to look whether there is a case of composite supply or mixed supply.
Yeah,
that's great. So I think I need to move to my another question. Price, like price is the sole consideration. Valuation, when we talk about the valuation, there are concept of price. Like for if I'm selling something, I can sell it in lieu of some consideration, or I can sell it, like free of cost. So I'm talking about what are the provisions if goods are normally supplied. Mr. Sahil, I'm just asking this question to you.
Like,
what are the provisions if goods normally supplied to customer for a consideration, say 20,000 to a customer for 10,000 only. Normally it is sold for the value of 20,000, but for a specific customer, it is sold for rupees only 10,000. So whether GST provision would allow to sell it at the rate of 10,000 rupees, or a supplier has to pay tax on 20,000. So it's a question of sole consideration.
Sir, like Sumit, like Anoop ji has already explained, that is the sections 15(1) says price is the sole consideration, and secondly, it is not sold to the unrelated person. If these two are the conditions are satisfied, then the transaction value will become the value of supply. In our question, as you have said that the actual value of the goods is 20,000, but it is supplied to another person at the rate of 10,000. If the supply is made to any unrelated person, then the value of supply should be taken as rupees 10,000. If it is done to the related party, then the related party provisions will be applicable, like valuation provisions. Rule 28 says about the valuations if supply is made to the related person. There are 4 clauses in which first is the open market value of the goods. Secondly, value of like and quality, same kind and quality goods should be seen. If that application is not applied, then the third is the open market value, that is rule 30 or 31 is to be seen. Like rule 30 says 110% of the cost, and rule 31 says the natural principles, general principles should be applied if the other valuation should not be done. In the given case, 10,000 is the value of the supply if the goods are sold to unrelated person, and if the goods are supplied to related person, then the value should be 20,000.
Okay. So in case of Saili, I am just repeating it. Like in case of unrelated person, price will be the sole consideration on which tax is to be levied. Irrespective of the fact, it is sold to some a particular customer for 20,000 and to another customer 10,000. Irrespective of the fact. Okay, Saili, I think we need to move forward to another question. So Anoopji, it's a question to you. Like we have seen so many cases where there is a concept of exchange of goods. Like I'm having a mobile, right, and I want to purchase a new mobile. So my old mobile is carrying some value. So I am getting an offer that I can give my old mobile or old laptop, I can say, to in exchange of the new one. So in that case, I have a query. I have received a query from one of our subscriber. Like he wants to buy a laptop from a showroom, and he's getting a discount, exchange discount of rupees 10,000 on that. The laptop is for the value of 40,000, for example, and he's getting a discount of 10,000 in exchange of his old laptop. In that case, what would be the exact value of supply on which tax is to be levied by the supplier?
He is paying net 30,000 or he is paying 40,000?
30,000.
He is paying now 30,000 to the shopkeeper,
Yeah.
And he is also providing his old laptop to him, so that he is getting the exchange bonus.
Basically, net payable is 30,000. The value of laptop is 40,000, but after exchange, he's just paying only 30,000.
Okay. So as we have said that where price is only the sole consideration, then only the transaction value has to be taken for the purposes of valuation under. But in this case, there is something involved. It is not only the price 30,000 rupees which he is giving. That is not only the sole consideration. the consideration involved an old laptop. And if it is the case, then has to be determined as per the prescribed rules. And for these type of transaction where consideration is not wholly in money, then Rule 27 got triggered. We have to see Rule 27, what it says. So if we go to Rule 27, it says that where the price is not only the sole consideration, then we have to see what is the open market value of that supply. If the open market value of that supply is available to us, then that will be the value for the purposes of GST. So first of all, we have to look that at what rate this laptop is sold by the shopkeeper to generally what is the laptop cost if there is no exchange. As you have said that the laptop cost is 40,000. In that case, that 40,000 will be the value. If in case the open market value of a particular commodity is not available, then what we will have. In our example, what we will do is we will add up the value of the goods which are given in exchange. So 10,000, you are saying it is given as the exchange bonus. That 10,000 we presume it to be the value of the old laptop which he is giving, and rupees 30,000 it is giving in cash. So the total value again comes out to be 40. So in our case, the answer is 40,000 will be the value on which GST has to be charged, even if the customer is giving only 30,000 to the shopkeeper. So this has to be keep into the mind.
So Anoopji, by this means like supplier will charge GST at the applicable rate on the value of 40,000, irrespective of the fact he is getting 30,000.
Yes.
Okay. So Anoopji, similarly, I have another question that I have received from one of our subscribers that is related to like out-of-pocket expense.
Yeah.
So out-of-pocket expenses, like I'm taking an example. Like I'm providing a service of auditor, and while going for the audit, I'm spending some out-of-pocket expense.
Right.
So in that scenario, my fees decided. Like for example, it's 5 lakh rupees for the audit.
Okay.
And I'm charging out-of-pocket expenses of 50,000, say for traveling, for food, and etc. A number of expenses I can incur during the performance.
Generally, this is done in the trade parlance, and being an auditor,
exactly.
Always it is done.
Yes, it happens. It happens.
So
I'm just taking an example of CA because in our fraternity they can understand this by a live. So similarly, along with the fees of 5 lakh rupees, I'm also incurring 50,000 as the out of pocket.
Right.
So now the question arises: what would be the exact value on which I must charge tax? Like it's 5 lakh or it's 5 lakh 50,000, including out of pocket tax. So what are the provisions related to this in the GST?
The answer is given in section 15 only. Section 15(2) says about the things which are to be included in the value on which GST has to be paid. So what are the inclusions given in that section 15(2)? First one is the incidental expense. The incidental expenses incurred by the supplier while supplying his goods or service at the time of supplying that goods or services, or before that time, if any any expense has to be incurred or those goods and services, and it is not included in the value, then it has to be included in the value for the purposes of determination of taxable value under. Like if it is any commission, any packing charges, or as you say, out-of-pocket expenses. If I am charging anything like that, then in that case, it has to be included in the value. And even if any taxes, duties, fees, charge, if anything is levied under any law, other than the GST part, other than the CGST, SGST or IGST, if any taxes has been charged, then also it has to be included in the value to arrive at the taxable value under GST. Similarly, any amount incurred by the recipient of supply, as in our example, we have incurred the expenses of 50,000 rupees and we are claiming, the auditor is claiming from the client. But even if the client has itself incurred those expenses which we were supposed to incur, then also it has to be included in lieu of supply as per section 15(2). And one more thing which is most important and which is unique to the GST, the interest or late fees or penalty for delayed payment of consideration, that is also included in the value of supply. How it is to be done and all those things, I am not going into that nitty-gritties. But all these are inclusions in the value of GST. One more thing is there. if any subsidy is given by anybody. If any subsidy is given by anybody, then also it has to be included in the value of GST. Only the subsidies given by the state government or central government has to be excluded from. Let's say let's say we are charging a fees of 5 lakh rupees and there is a government subsidy of say 1 lakh rupees on that. In that case, I have to charge GST on 4 lakh. But if it is not a state government or central government subsidy, any other authorities that subsidy, then that subsidy will not be deducted from the value of my services, and I have to charge GST on 5. Coming back to your question, in the answer, the answer to the question is I have to include 50,000 in my value. And the total value on which GST is charged is 5 lakh. The auditor has to charge 5,50,000 as the amount on which the GST. Right, Sumit?
Yeah. Anoop. So if I'm briefing it out, like anything which is incidental to the main consideration needs to be included in the value for the purpose of GST.
Yes.
Okay. That is taking the color of consideration. So my next question, I'm coming to Sahil ji. Sahil ji, my question to you, like I'm just summing up the question. In case of, we have seen the cases of supply to distinct persons. Like I have a registration in Delhi and another registration in Maharashtra. There could be some exchange of goods from one registration to another registration. So in that scenario, I'm just coming to the question. For example, I'm selling a good. I'm a trader. I'm selling the goods. I have registration in Delhi. I have registration in Maharashtra. I'm selling goods to X. That has nothing to do with me. He's an independent customer to me. I'm selling goods of rupees 20,000
to an unrelated.
Yes, but when I'm selling the same good to or transferring the same goods to my another registration. For example, if I'm sending the same goods, transferring the same goods from Delhi to Maharashtra and just raising an invoice of rupees 10,000, just bringing a difference of 10,000 rupees when I'm selling it to an unknown customer and when I'm selling it to a distinct person. In that scenario, what are the provisions related to this transaction under GST?
So coming to the question, like you are saying, we have supplied the goods to the unrelated person. In that case, the supply value is rupees 20,000.
Exactly.
And if we are supplying the same goods to the branch office, like in the Maharashtra, which is a distinct entity, the value is going to be that rupees 10,000.
Yes.
So here the price would not be the sole consideration. As per section 15(1), price is not the sole price is the sole consideration, but it is done to the related person. So in that case, related person provisions will be applicable. And similarly, in the like in the last question, Rule 28 provisions will be applicable. Rule 28 provisions contain 3 clauses. First is the open market value. If the open market value of the goods is known, then that should be taken. If that provision is not available to us, then the value of the like goods, like kind and quality goods, which is supplied by any other person to the unrelated person, is to be taken. If that is also not available with us, then we have to go to Rule 30 and 31 in the similar formation. First of all, we have to see Rule 30, that is cost plus 10%. Means 110% of the cost of the goods which are supplied. If we are not available with the cost of the goods, then we have to see Rule 31. Rule 31 is similarly the general provisions in value of the goods interpretation should be taken. There is one more. There are 2 provisos to that. First proviso is about if that goods are again supplied to some unrelated person by the recipient, then the value can be taken as a 90% of the goods supplied to the unrelated person. That the value of consideration availed from that unrelated person, whose value ka 90% can be taken in this scenario as the value of supply. The second proviso overrules everything. The old provisions, the earlier discussions are overruled by the second proviso, which says that if the receiver is a registered person and is allowed to take the full ITC, then the transaction value will be the value of supply. If I want to ask question, Sumit ji, that the branch office is registered and is allowed to take the full ITC in our question, if that Sumit ji?
Yeah, I'm listening.
Sir, if the branch is allowed to take the full ITC, in that case, rupees 10,000 will be the value of supply and GST is to be charged on rupees 10,000. If the branch is not allowed to take, then the open market value, that is rupees 20,000 in our case, will be the value of supply.
So, Saili, you mean to say distinct person, distinct. This will be categorized as distinct person if I have 2 different registration means one registration in Delhi and second registration. So both the registration will be called as distinct person under the provision.
As per section 25(4) and 25(5), distinct entities definition is given.
So Sahilji, I think another question that I can see in this particular primary question, like valuation value, like I'm taking here in 10,000, and my another registration Maharashtra is eligible for the entire credit applicable on the value of 10,000. So by virtue of that, you mean to say if I transfer it for the value of 5,000, is still in that case it is as per the provision of GST.
G. Then also the value should be 5. If the branch office is entitled for complete ITC, actually the government wants to say that if the receiver is entitled to claim full ITC, then on the outward supply to the unrelated person, he will supply at the full value, and the full GST is to be paid. In that case, when the full GST is to be charged from the customer after reducing the ITC on the 5,000, if the value of the goods is 20,000 charged to the unrelated person by the receiver, then he has to apply GST on 20,000 as an outward supply, and as an inward supply on the GST has been availed by him only on 5,000. The differential tax will be received by the government in any case.
Oh, okay. Thank you, Sahilji, for such a good explanation. Now coming to Anoop ji, I have a question for you. We have seen the concept of pure agent.
Yeah.
There are so many complications we have seen among the taxpayers, like what is to be treated as a pure agent or not, and what is to be, whether it is to be included in the value or it is to be excluded from the value. So similar pattern, I have received a query from our subscriber wherein he's saying like he's having a client who is a tour operator.
Okay.
And he receives a tourist to visit Agra,
right?
And he is just offering his services of tour package for 10,000, and in that package taxi is not included.
Okay.
So when the visitor asking for the taxi, in that scenario, what his client is doing, he is arranging a taxi from a third party vendor,
okay,
and charging from the visitor. But the question is here that he is not adding any markup for the services of, for example, he is charging 7,000 rupees for the taxi from the visitor, and the taxi provider again charging 7,000 from his client.
So he is taking only 10,000 rupees as his fees, which was earlier
for the tour package
between them.
For the tour package only 10,000.
Okay.
But for taxi there is no additional mark.
Right.
So now the question is like whether he has to pay tax or his client has to pay tax on 10 plus 7, 17,000 rupees or on 10,000.
Good question, Sumit. And this is a legacy provision from service tax. A concept of pure agent was firstly defined in service tax regime. And now also in respect of certain supply, where any expenditure is incurred by the supplier acting as a pure agent, then GST should not be applicable on that. But there are certain conditions, there are certain restrictions on this concept. First one, the supplier should act as a pure agent while giving the supply. It is in addition to the supply, which is a principal supply. Like in our question, we are saying that he is supplying tour operator services. In addition to that, he is supplying some taxi services on that behalf. So what are the various conditions which are to be satisfied that GST is not applicable on this 7? We have to look into that. So first condition is that it should be on a proper authorization of that client. The client has authorized that payment, and it is on behalf of the client only that the person is acting. He is acting as an agent. The intention of the parties is such that it is acting as a pure agent. Secondly, at the time of charging, at the time of raising the invoice, this tour operator has to show that 7,000 rupees as taxi charges separately in his invoice. He cannot raise the invoice of 17,000 lump sum and then excluding that 7,000. No, he has to separately indicate in the invoice that 10,000 is for my services and 7,000 is for that taxi services, which I have taken as pure agent from some supplier for you. And it should be, as I have said, it should be in addition to the supplies which are the already being made or which have already been agreed upon. So these are the basic conditions which have to be satisfied in order to be a pure agent. Secondly, what is a pure agent? What is the definition of a pure agent? That has to be. So for a pure agent, there should be a contractual agreement between those parties that they will be acting as a pure agent. Secondly, the title of the goods or services so procured. I am taking that taxi on behalf of that person. So the taxi bill, the taxi invoice should also be in the name of that person. Then only it will not be added. Let's say I as a chartered accountant, if I go and pay some taxes of some person, so I am not the title holder of that taxes which I pay on behalf of my client. That has to be paid by my client only. Even if I am not providing any services, then also that has to be paid by that client. But in this case, if the holding of title is very important, that title is held by the client only, and it is not held by the supplier of goods or service. Thirdly, it should not be used by that supplier on his own interest. It should be for the benefit of the client only. It should be for the benefit of the recipient of the supply. And lastly, as you have said, that it is charging only 7,000 rupees and no markup. It is the precondition to be a pure agent, to be put it into the category of pure agent, that no markup or anything has to be charged from that person. So if all these conditions in the question, in the given example by you, are satisfied, then only this 7,000 will be excluded from the value of the supply. If it is not so, if the bill is not in the name of the ultimate client, if the title, if there was a contractual agreement, and all those things are there, then then it will not be counted as a pure agent, and he has to charge GST on 17,000, 10,000 plus 7,000 as taxi charges. But if all the conditions and all the definition of pure agent are satisfied, in that case, it will not think GST on rupees 7,000.
So Anoop ji, if I say, like, one of the primary condition is that the entitlement should not be passed. Like the service, like service of taxi, should be directly provided to the visitor by the taxi owner.
Yes, exactly.
And the invoice should be in the name of visitor that is issued by the taxi owner.
Yes.
And however, the tour operator can charge the invoice of taxi by putting it as a cover invoice from the visitor.
Exactly, Sumit.
Thank you, Anoop ji, for taking up this question. Next question, which I have received from our subscriber, that is related to sale of vehicles. For example, I am a businessman. I am running a business, and for that purpose, sometimes I have to purchase a vehicle. I have purchased that, and I'm booking it as a fixed asset in my books of account, and I'm taking the benefit of depreciation on that capital. So Sahil ji, the question is like, I have a vehicle which I purchased in motor vehicle which I purchased in 2017, way back in 2007, and is having a depreciable value of 35,000 right now in my books, and I'm selling it today for the value of 40,000. In that scenario, what are the provisions available in the GST law, like applicability of GST on the sale value of motor vehicle?
So basically, as per the question, अगर हम बात करें तो इस क्वेश्चन में जो बात की गई है वो की गई है कि about the sale of vehicle. The sale of vehicle is first of all we have to discuss about the value of ITC availability on the vehicle. As per the provision of the GST law, section 16, 17, 5, both sections says about there is a provision that no ITC shall be available on the vehicle, on the car. So coming to the provisions of GST law, notification 8/2018 of central tax rate, that says the sale of car, of the old car on which no ITC has been availed, the GST will be charged at the rate of 18% on the differential value of the car sold. Like in the example, the sale value is 40,000 and the depreciated value, that is rupees 35,000. The differential value comes to rupees 5,000. Coming back to the value, like we have purchased a car. Sumit, can you tell me the amount of purchase of the car in 2017?
I have in my question it is 4,50,000.
Okay. Sumit ji said that value of the car is 4,50,000. Ignoring about the slab rates of the income tax or on the depreciated value, the depreciated value has been given in the question, that is rupees 35,000. So I am taking it as rupees 35,000 as the depreciated value. Talking about the if we have a slab of as per the income tax act, there is a slab of that car. In the vehicles, we have multiple cars. In that case, we have to calculate the value of that car which we are selling from the start of that purchase value, applying the depreciation rate and the value in the year of sale. In that case, we have to take the sale value minus the value we have calculated. In the given case, I am assuming that there is only one car and which is valued at depreciated value 35,000. So the value comes to rupees 5,000 as a value of supply for GST purpose. I am clear, Sumit ji?
Sahil ji, if like here we have seen the residuary value is 5,000, like 45 in 40,000 I'm selling it, and my depreciable value is 35,000.
In that case,
Sahil ji, let me finish. What if the sale value is 35,000 and the depreciable value is 40,000?
Sir, in that case, if the value is negative, the differential value comes up to negative, then no GST has to be applied on that. Then the value of supply as a taxable value of supply will be 0. In the given case, like 45,000 minus 35,000 will be 10,000 minus negative value will be there. So no GST will be applicable in that case.
So no
GST if the residual value is higher than the sale value.
So no GST will be applicable if the residual value is negative. Okay. Thank you, Sahil ji. So just moving to the just keeping the time considering the time constraint. Just moving to the another question. My another question to Anoop ji. Anoop ji, there is a question of valuation wherein I'm just giving goods at some lower price. Like I have a cost of production is higher than the value I'm charging from the customer. Okay. So the question which I have received, I'm just reiterating the question. Mr. X has developed an innovative product and wish to supply as a sample. Means it's in a R&D process. The product is unique in nature and comparison is available in market. So he has incurred 2,40,000 rupees as a cost of product. And for the sake of promotion, he's just selling it in the open market for rupees 20,000 rupees. Okay. So what is your say on this? Like, is there any restriction in the GST provision that you cannot sell it below the cost of manufacturing value? Is there any restriction in the GST provision?
Sumit ji, I cannot find out any provision in the GST which says you cannot sell any goods on law. The conditions prescribed in section 15, as has been discussed by me and Mr. Sahil ji also, we have to see section 15 about the valuation and the related rules which are provided in rule number 27 to rule number 35 of the CGST. If the transaction is a neat and clean transaction where there is no vitiation about the related party or where price is the sole consideration, then in all those cases we have to take the transaction value only for the purposes of ascertaining the taxable value. So even if my cost of production of that R&D product is 2,40,000 and I am selling it for a meager amount of 20,000 as sample to somebody, and that person is not a related person, and I am not getting anything else other than rupees 20,000 from that person, then 20,000 only will be my transaction value. That will be my assessable value under GST, and I have to pay tax on 20.
Okay, thank you. So it means that we can fight, before the authorities, before the department, that if they are arguing on this particular point, that how can you sell it before below the the cost you have incurred. So we can fight on that. There is no such kind of provision in the GST.
There is no question of fighting, boss, because there is no provision, and why the department would also say like that? On which provision they will say like that? So I think
department people doesn't they don't need any provision just to make arguments.
Yeah, on a lighter note, it was good.
So Sahil ji, just moving to another one, I have a question for you.
Yes, sir.
Regarding the inclusion in the value in the consideration. Like I have a question, I've received a question related to renting of a property. Like I have a like my subscriber says like he is having a client who is into the business of renting of immobile property, commercial property specifically. So he's just charging 20,000 rupees or 25,000 rupees. For example, let's take example of 20,000 rupees. They've mentioned is 20,000 rupees as a rent, monthly rent. And apart from that, he's also paying, the owner is also paying the municipal taxes, house taxes to the government. For example, 2,000 rupees. They mentioned 2,000 rupees. Yes, 2,000 rupees paying to the government. And apart from that, what happened? The tenant could not pay the rent on time, and for that delay, he has charged a nominal amount of 500 rupees as a interest from that tenant. So now the question arises: what is to be considered as a value for the purpose of GST? For example, rental value. Apart from that, the house tax he has paid to the government, and on top of the above interest amount. So what would be the value? I'm just again repeating it: 20,000 as a rental, monthly rental; 1,500 rupees as a 2,000 rupees as a house tax, property tax, and 500 rupees as a interest.
सुमित जी, as per the question, अगर हम इस क्वेश्चन को देखें तो इसमें आपने अमाउंट की है 20,000 per month as a rental which we are charging. I want to know that 2,000 rupees, 2,000 as a property tax which the owner has paid, whether he has charged that amount from the tenant or not.
Sorry,
sir, whether the owner of the property has charged rupees 2,000 which he has paid as a property tax.
Yes, he is charging from the tenant.
Okay, in that case, as per the section 15.2, 15.2 says about the inclusions in the GST value of supply. Section 15.1 says the sole price should be the sole consideration and the supply should be to the unrelated person. And the 15.2 says about the inclusions in the value that is paid along with the actual price of the supply. In the given case, like 20,000 is the monthly rent, which is the principal value for the supply. Secondly, 1,500 which is charged as a taxes other than IGST. All the taxes, fees, penalties, anything which is charged from the tenant except for the GST he has paid to some other supplies. That value should be included in the value of the consideration. Thirdly, any late fees, penalty, interest which is charged by the owner from the tenant shall also be included in the value of supply. It will take part. The actual price should be 20,000 plus 2,000 the house property tax plus 500 which is the interest on the late payment. The total invoice should be of 22,500 as a value of supply for the GST purpose.
So interest, you mean to say interest will become the part of the consideration, and GST
Yes,
will be applicable
on that. Secondly, I want to add on in this point, as per the provision of GST law, interest, if not charged in the actual invoice, will be charged at the time of receipt of interest.
Okay.
Interest, late fees, anything which is incidental to the actual supply, known at the time of when it is known, it will become the supply and will take the part as a principal.
Okay. So tax can be paid on the interest portion as and when it is received.
Ji.
Okay. Thank you, Sahil. Thank you. Just moving to another question. It's already time is lapsing. So Sahil ji, my another question to you related to discount. So we have seen so many cases like where we see like pre-discount, pre-sale discount, post-sale discount, cash discount. So there is a question based on that particular thing. Like somebody has purchased, supplying furniture. Mr. XYZ supplying furniture of rupees 15,000 to A, and for that supply he is just incurring a freight charges of rupees 1,000 rupees. So like 15,000 and 700 as a freight charge. And when the furniture reaches to the home of the recipient, at that time he asks for the supplier just to give me some discount, like additional amount as a freight he's paying. So he's just looking for some discount at that point of time after reaching the goods at his place. So like he asked for the 1,000 rupees discount. So like 15,000 as a furniture, 700 as a freight charges, and 1,000 as a discount after reaching the goods. So in that scenario, whether 1,000 needs to be included in the value, or can the supplier adjust 1,000 rupees, the tax paid on 1,000 rupees from the from the actual liability. So the question is, what is the actual value in this case for the purpose of GST?
Sir, as per section 15(3), अगर हम 15(3) के हिसाब से बात करें तो वो सेक्शन कहता है कि द डिस्काउंट, एक्चुअली सेक्शन 15(3) डिस्काउंट को डिवाइड करता है टू पार्ट्स. फर्स्ट इज द प्री सेल डिस्काउंट एंड द सेकंड इज द पोस्ट सेल डिस्काउंट. इफ द सप्लाई, मतलब if the discount is known before the supply, before or at the time of supply, then that is to be excluded from the value of the supply. And if we are not knowing the discount before or at the time of supply, then in both cases, pre-sale, basically post-sale supplies, in the case of post-sale discounts, that amount should not be reduced. Like in the case of post-sale discounts, there are two conditions. Firstly, the discount should be known before or at the time of supply. And secondly, the receiver should have reversed the ITC on that discount portion which he has taken. If both the conditions are fulfilled, then only post-sale discounts are excluded from the value of the supply. In the given case, the value, the discount is not known or agreed upon before the actual supply in the given case. So 1,000 should not be excluded from the value of supply. Actual value of the supply should be 15,700. The actual cost of the furniture, the 15,000 plus 700, which is included as per section 15(2). Any incidental expenses that it freight, 700 should be added, and 1,000 should not be reduced from the value of the supply. Whether it is in the given case, it is as a post-sale discount which is not agreed upon. So the value should be 15,700.
So Sahilji, you mean to say that for the purpose of reducing the discount value from the value of consideration, it must be known at the time of supply,
G.
not post supply. So here comes out 15,700 would be the final value.
Value of supply.
Okay. So my last question, because I have to take a few questions from our participants or subscribers. So my question to Anoop ji, this is the basic question. I think it relates to one of the sector which we call sometimes like unorganized sector, or there is a lot of ambiguities comes in this particular sector related to valuation, like in the as-filed regime of service tax as well. About the foreign exchange valuation in case of foreign exchange, like the question we have received from 3 or 4 subscribers, similar question, like valuation in case of a person dealing in exchange of currency. So what are the provisions related to that in the GST law?
Okay, got your point. Actually, Rule 32 of the CGST rules talk specifically about some transaction, like these transaction on which how GST has to be calculated. There is an elaborate thing given in this rule regarding the valuation on which GST has to be paid in case of the currency exchange, whether by a money changer or whether by any other else. So if a person is in the business of exchanging money for its client, then there are two options given. There are two options given in the rule. I am going through first the option number 1, which is given in the rule. If there is an Indian rupee involved in the transaction, it is an exchange of one currency to another. And if Indian rupee is involved in the transaction, whether we are exchanging Indian rupee to a dollar, or we are exchanging some dollar to Indian rupee, in that case, we have to see the buying rate and selling rate of that currency vis-a-vis INR. And at that, the difference between that buying rate and selling rate at that particular date of the RBI has to be taken, and on that value we have to pay, right? There may be cases that the reference rate of that currency is not available with us, like there is some currency which is not tradable as per the RBI norms, which are not exchangeable. So in that case, how the value is to be determined? So in that case, we have to arrive at the rupee value which we are giving. So one person is giving Indian rupees and one person is giving that forex to him. So what is the value of that Indian rupee? So we have to take that Indian rupee value and we have to pay 1% tax, 1% as the value on which GST has paid. That is the thing. Or it may be the case that there is a transaction between the dollar and US dollar and Great Britain pound or euro. So no Indian rupee is involved in that case. How to determine the value in that case? In that case, we have to calculate the rupee value of both the currency. Let's say there are 100 GBP, or let's say there are 120 US dollars. We have to calculate the rupee value of both the currency. So the lesser amount which we are getting from those conversions, the Indian rupee value, we have to take 1% of that lesser Indian rupee, right? In our example, let's say that for 120 120 US dollar, we are getting, let's say, 10,000 rupees, and for 100 GBP, we are getting, let's say, 9,000 rupees. So I have to calculate 1% of that 9,000 rupees, that is 90 rupees in this case, will be my value on which GST has paid on the applicable rate. So this is the option one where I have to calculate like this. The other option is like in which absolute percentages are given, on which we can calculate the GST and we can pay that. We don't have to go into the buying rate, the selling rate, and all those things. So we have to see that if it is up to 1 lakh of rupees, if the consideration is up to 1 lakh of rupees, then in that case, 1% of the gross amount of the currency exchanged has to be taken as the value on which GST has to be paid. If the amount is above 1 lakh rupees, but it is less than 10 lakh rupees, or say it is up to 10 lakh rupees. If the amount is greater than 1 lakh, but up to 10 lakh rupees, then 1,000 rupees on that 1 lakh value, and plus now for the remaining value, we have to pay 0.5%. We have to take it as the value. So 1,000 plus 0.5% will be the value on which GST has to be paid. Now, if the amount of currency exchange is more than rupees 10 lakh. In that case, what has to be done? Then we have to pay GST at 0.1% of the amount exceeding 10 lakh rupees plus 5,500 rupees, that is up to that 10 lakh rupees. So the total amount on which GST has to be paid is 5,500 rupees. In addition to that, we have to calculate 0.1% of the remaining amount. The maximum amount, the maximum value on which the GST has to be paid is 60,000 rupees, and the minimum amount on which GST has to be paid is 250. So these are the provisions in relation to the transactions of conversion of money from one currency to another. As you have said that there are certain ambiguities and all those things in the erstwhile service tax regime also. But now this has been very well settled, and a comprehensive formula for the calculation of the value on which GST has to be paid is given by the GST law. So I think there should not be any problem for paying GST on it now.
Thank you, Anoop, for such a wonderful insight on this particular issue. So I think you have addressed, very well related to this particular, valuation mechanism in the foreign exchange, person dealing in this particular field. So I think I must give some time to my subscribers. If they have some questions, they can reach out us on this chat box. They can raise your question. So as of now, we have received Anoop ji and Sahil ji. We have received two different questions. Let me share it with you. Vinod Kumar Sharma ji is asking, a Delhi-based registered subcontractor is providing works contract related to construction of showroom in Delhi, and the recipient is registered in UP. Place of supply under section 12(3) should be Delhi, and CGST as it should be charged. In my view, recipient is insisting on IGST. Please clarify.
So, Vinodji, you are absolutely right that as per the place of supply provisions, in case the supply is in relation, the service is in relation to a immovable property, like you are providing the services of works contract, in that case, the place of supply shall be the place where the property is located or it is intended to be located. So, and for the purposes of levying of CGST, SGST or IGST, I have to see what is the location of the supplier and what is the place of supply. If the both are in the same state, then I have to charge CGST, SGST. If both are in different states, then I have to charge IGST. By no stretch of imagination, we can say that we can charge IGST in this case. You are rightly charging CGST and SGST.
Hopefully, Vinod Sharma ji got the clarity on this particular point. So we have another query from Mr. Amit. He's asking one case, like 3 proprietor work contract service to provide one case 3 proprietor work contract service to provide to JV. In JV, all 3 proprietors are partner. JV work contract billed to government entity without adding profit on cost. Department asked to deposit tax under Rule 30 of CGST rule, that is cost plus 10%. Please clarify.
Sahilji, will you take or?
Sir, आप बताइए.
Sir, Rule 30, I think it is 110% of the cost price which they are saying.
Yes,
right?
Yes.
But in this case, if the government entity is not a related party to those JV partners or the JV itself, in that case, what I have understood, there are 3 persons who are working in a JV and they are providing services to the government. So for those services, they are not charging any markup on their cost, and they are just providing no profit, no loss services to them. In that case, I don't think there is anything which if there is anything which they are getting from the government entity over and above this price, or if price is not the sole consideration, or if it is a related party, I don't think it cannot be a related party. Nobody is a related party to a government. So if it is providing, if there is no other consideration involved, then I think there should not be cost plus 10% markup should be levied on that, and the price at which they are billing to the government department, that should be the price on which GST has.
Thank you, Anoop ji. I think Amit ji, you might have got the clarity on this particular issue. If you still haven't got the proper clarity, I think if there is something missing in the question, then I would request you, if you are a subscriber, then you can post your query in the ask your query section. You will get a detailed reply on. So I think somebody is raising his hand. Naveen Modi. Naveen, any question? See, if you have any question, then you can post it in the chat box before we move to the closer.
I think there is some participant who is requesting for audio chat and like that.
Yes. I'm just trying to.
Sumit ji, you can allow speak.
I'm just facing the problem over here. I have allowed him. I think he needs to unmute himself if he has some question.
Rao ji, can you unmute yourself, or Sumit ji, you can do from the Taxo team?
Let me go to somebody else. I think facing some problem might be. I would request Rao ji, just you can post your query on the ask your query section on the taxo.online. We will take up your query over there. Since here we have to move to the closer. So here I thank the guest speakers, Mr. Anoop ji and Sahil Gupta ji, for the wonderful insights on the various questions we have raised, our subscriber raised on the valuation. So thank you very much. We would definitely would like to have you some other day on this another primetime show. So with all this, I would
thank you, Sumit ji, for giving us an opportunity to provide our valuable opinions.
Sir, our pleasure. It's our pleasure, sir.
It was a wonderful session with you guys, and we really enjoyed the questions raised by you, and it was a great. Thanks.
I think Anoop ji, I think there is a question we have received from before wrapping up. We will take up one more question. A dealer reported. Rao ji has raised a question. A dealer reported double the actual purchase input, double the sale, and October tax. What is the remedy?
Yes, by mistakenly given reported twice the amount of tax.
Yes, purchase as well as I think sale. Both they have recorded twice.
In GST or 3B.
In 2018.
In 2018?
Yes.
Okay, I don't think there is any remedy now available. They have to go to the department and seek refund of the differential amount which they have paid in excess. That is the only remedy available, I think. And even the input tax credit which they have taken twice, that would also be disallowed by the department, and again a liability.
So thank you, Anoop ji. Thank you very much, and we will definitely look for you some other day. So we are just ending up this session, and we have just an announcement. Like we have another session on 22nd of July. On the topic of input tax credit, and we'll request our subscriber just to join that webinar for just getting the knowledge and for the update. Thank you very much.
Thank you, Sumit.
Thank you, sir.
Thank you, Sumit ji. Thank you, Anoop ji.
Okay, Sahil.